So you're probably feeling a little lost in the world of investing. Terms like day trading, spreads, ISAs, Forex are all being thrown at you at once, but don't worry, you're not alone. In this video, I'm going to tell you how you can start your investing journey with as little as £100. I also want to share with you what I would do today if I was just starting my investing journey right now, because let me tell you, I do things a little differently. On this channel, we talk all things finance and investing related, and I try my best to give you it all without any BS or hype. There's a lot of noise in this space with people selling you courses, stock tips, or even selling pictures of monkeys. For me, I'm more interested in the proven way to make money and grow your wealth, which is the approach of compound investing over a long period of time. So where do you start? What is the first thing you do when you just start your investing journey? Now, this might sound mad, and I know it's going to sound different to what every other video says. Pretty much everyone is telling you to do research first, then go and buy a stock or an asset. But the issue is, like I said already, you're probably going to become overwhelmed with research because there's just too much to learn. Warren Buffett has been interested in investing for nearly 90 years, and even he says he's learning every day. My thoughts on this and what I've told clients in the past is just start. Open an account right now, deposit, and buy something. It sounds crazy, but this is the right mindset to get you on track to committing to your financial future. Many people just put it off till tomorrow and never invest at all. This does, however, not mean going YOLO into a oil futures contract in a FX reserve currency, because you probably don't have a clue what that is. What I mean by open an account, invest into something right now is buy something you know. For example, to my friends who are not as financially savvy, I just say go and open an account and just buy Apple or Google. You know the company, you know the products, you know and use them every single day. And every day as you open your investing app and naturally log in to see if you're up, down, left or right on the day, as time goes on, you will be evolving and learning on the job. You will end up eventually checking things like financial reports, PE ratios, and many things that don't make any sense to you right now. And this is all down to because now you are committed and you have skin in the game and you want to tell everybody you own a stock. With this method of opening an account and just depositing money, you're teaching yourself you have to do this. £100 is not going to change your life or ruin you financially, but this, in my opinion, is a very important step, and even if you're on the fence, just take the leap of faith. Worst case scenario, you're literally going to lose a meal for two people in a decent restaurant. And if you're in the UK or Europe and you don't have time to research, there's a link for eToro down on the pinned comment. I use them daily across the board and they tick most boxes that investors are looking for. I've also done several videos on them, from simply opening an account, making an investment, and selling the investment. So if you're interested in that, make sure you have subscribed. But there is another thing I would say newer investors mess up on, and that is buying stocks or assets.
What do you mean by that?
Which I know is going to be kind of contradicting because I just said go and buy Apple or Google. But you need to understand that buying a simple stock or asset like Apple or Google, you need to probably hold it for a long term and be willing to sell it at a loss if you need the money. The market fluctuates and nobody wins 100% of the time. In fact, a win rate above 50%, little over a coin toss, means that you outperform most professional investors in the market anyway. By me saying go and buy Apple or Google, I'm just trying to force your hand to take an actual action. But now you're in the game and you've done that, I would tread a lot more cautiously. Most investors, in fact all investors, should be buying into ETFs as the bulk of their portfolio. Now ETF stands for Exchange Traded Fund, which might confuse you a little bit, but relax, I've got you. An ETF is basically, just imagine, a basket of different companies or assets with different features. For example, an ETF that follows something called the FTSE 100 is just a basket of companies, which is the 100 biggest companies listed and trading on the London Stock Exchange. So basically, rather than buy all these companies individually, you're just buying them under one umbrella or one basket. Imagine buying into all these companies for less than £100. And you can actually do that in today's world with fractional shares. Again, something eToro offers. And if you're starting just now, I do envy you because this was not a feature when I was just starting. You can also buy into another ETF called the VOO, the VOO, which is a managed managed ETF by Vanguard, and it's my personal favorite, my personal biggest holding, which tracks the 500 biggest companies listed in the United States. And if you wanted a more wide world exposure, you can buy something called a VT, which is a basket of both US companies and worldwide stocks too. It's a little bit more volatile, but over a long period of time, it gives you exposure to emerging markets like China and India and offers a potential higher risk and higher reward. Now, this is where people fail the most. This is the boring part of the video where many people will click off and not act on. You need to find an ETF or several ETFs and figure out a commitment. Find an affordable sum, whether it be £100 or £1,000, and commit every single month to buying into that one or two or several ETFs. And the key to all of this is every single month, without fail. If you commit to this every single month, it will compound into an amount of money you never even imagined. For me, I personally invest a fixed amount into ETFs like the VU every single month. I have several others. I have VT and the previous mentioned FTSE 100. But to put this into nominal terms, my total market exposure to ETFs, my whole net worth on the market, is always over 50% of my total net worth on an exchange. Now, the VU has historically returned about 9.6% return to investors as an average over the past 30 years. Meaning if you committed just £100 per month to the VU and started 30 years ago, you would have a staggering £209,000 in your investing account, while you have only invested from your pocket £36,000. Which is staggering. A big mistake investors do is they commit 100 and think 100 is going to be the same in 30 years time, and it's not the case. Your salary goes up, inflation goes up, and you need to mimic this, otherwise it's going to be worth jack toffee. I mean, £100 30 years ago could buy you a semi-decent second-hand car if you were lucky. So what we need to do is go back to this compound calculator, there's a link for it in the description, and we need to add annual increases to this £100 to get something reasonable that we can actually use. Now, inflation in the UK from 1960 to 2021 has averaged about 5.1%. So if we plug that into our calculator, we see that this £209,000 has gone absolutely crazy. We now have £336,000. Now, this by no means is enough money to retire, but I promise you, it is teaching you something, and that is the power of compound investing and investing from habit. And trust me, again, you want to start right now. Here's a bit of a story from my own experience. I started passively investing into ETFs on a serious basis when I was about 22. Before that, I was always interested, but it was lackluster and lazy. One year I'd have a holiday with the boys in Faliraki, the next year I'd want to buy a new car. But the reality is, I could have committed 4 years earlier, and those 4 years have cost me a staggering amount, even on this simple $100 a month. If we add just 4 years onto the current model we're using, our £336,377, we would have made £500,000 British pounds. That's right, by waiting just 4 years, you could lose on £100 a month over 30 years, a potential £180,000, just because you didn't take action. And I really hope this answers your question, because where should you invest £100 today? And the reality is, it doesn't really matter. The key is starting and committing. For me, I'd seriously look at ETFs. And if you want a complete breakdown of my 3 favorite ETFs, here's a video here going through my 3 biggest holdings. And if you made it this far, drop the code word down below, which is 100. Thanks for watching and good luck out there.